Hi everyone, welcome back to my channel. Today I wanted to quickly check in with you guys and talk about the stock market, how it has been working over the last 30 days, and how so many people are panicking. Today I wanted to quickly check in with you guys and talk about the stock market, how it has been working over the last 30 days, and how so many people are panicking. They're panic selling, they're selling everything that they have and just getting out. I find this really interesting because for me and my investing style, this is quite unusual. I buy and hold with a very long time horizon. So whatever I have bought, I'm holding for the next 10 years. However, it doesn't mean that I'm just buying any stock out there. I have built conviction in the names I hold because of certain rules I follow. And if you're not following a specific set of guidelines to pick your stocks, you might be fearful. And if you're holding for a very short period of time, then you have to ask yourself, are you a trader or an investor?
I want to be clear on exactly, as we're telling people now's a buying opportunity, that it still could be turbulent moving forward.
You see, the stock market can be very myopic. The short-sighted nature of the market makes everyone act like traders. So on a day-to-day basis, if you follow the stock prices, you may be feeling great or you may be feeling nervous. I don't worry about the stocks I hold because between now and 2030, all the stock prices that happen in the days between is just meaningless. What matters to me is the stock price in 2030 if I decide to sell it at that time. Everything in between is just noise. If you're worried about your stock, it's probably because you have not done your homework properly. You should be looking at all the fundamentals. You should know the company's products and services. And if it's a growth stock, you should be able to estimate how much the earnings per share is going to be in 2 years, 3 years, or 4 years' time. If the EPS is growing consistently every quarter and every year, then the company is executing on its goals. In that case, the price will eventually catch up no matter what the market does in the short period of time. You cannot chase the needle. Also consider, companies don't go bankrupt overnight, especially if a company has low debt on its balance sheet or no debt at all. Peter Lynch said, it's very hard to go bankrupt if you don't have debt. You should also be looking at return on invested capital. ROIC is a very important concept. If you compare ROIC among companies within the same sector, you should be able to see who the winner is. So here's a quick test. See if you can explain why this company is going to go 5x or 10x the current price within the next 10 years. If you can do that within 2 minutes and very simply, then you probably understand the company well enough. Otherwise, keep doing your homework. And for people who are holding on to cash and have never bought in at all, you cannot time the market. Nobody can. But if you feel that everything is still overpriced and no company that you like is fairly valued right now, it's fine to wait. However, if you wait too long, they may leave you behind. Consider my example. In 2018, I started buying Tesla at $55. After that point, it went down a little bit and I picked up some more at a cheaper price, but then it kept going up. I bought more at $60, $70, $100, $200, $300. The last purchase I made was a month ago, about $1,068. So yeah, if you keep buying over a long period of time, your average cost basis may look better or it may look worse than the first time you started buying that stock. Right now, we're getting great opportunities in the market. If it's a true growth company where the earnings per share is going to keep growing over the next 10 years, the stock price is going to be a lot more than where it is today. It's not going to matter if you can pick up the stock even 10% more cheaper than it is right now, because in the long run, it could be 10 times of what it is. For example, if a stock right now is $9.50, but in 10 years it's $9,000, then it doesn't matter if you're paying $8.50 or $9.50 or $10.50. They'll all look kind of the same if your account is up thousands of percent. If you're not comfortable buying everything all at the same time, that could be a good idea. You can buy them in stages. For example, if you want to buy a company in 3 stages, you could buy the first stage this month, buy another one next month, and buy the third stage 2 months from now. This way you can dollar cost average into your position. Please do your homework. If a company does not have earnings and it has a lot of debt on its balance sheet, high interest rate environments could hurt the stock going forward. You have to be convinced by the data that you're getting from the company's earnings reports that they are being able to successfully execute on their goals. If you're holding stocks in a great company, you will not be worrying. So relax and do whatever you want to do and not obsess about the stock market. You can think of it like a house. You're not getting an appraisal every year. You buy a house and you try to sell it in 5 years or 10 years time frame, and you're always happy with the appreciation that you have gotten. With stocks, you're owning part of a business. And if it's a good business and a profitable business, your stake in the company is going to be worth much higher. So do your homework, get conviction. Conviction gives you the peace of mind and makes you a better investor who can hold on to their stocks for the long term through all the dips and valleys that this market throws at us. So don't panic and have conviction. Till next time, this is Faisal signing off. Ciao.